Guys, sorry for the wait. I have been trying everything to get on here with you guys, and I finally accomplished it. Thank you for your patience, everybody. I really appreciate it. I won't let you down with the information. I have no clue why it took so long, but God, I searched every way to get on here and finally figured it out. Anyway, I'll just get started, and I want to teach you guys from ground level how to get to selling annuities and start earning more money. I don't want to tell you that that you're going to be able to earn $100,000 a month, but the possibilities sure are there if you seek out more annuities. And by doing so, it's very simple. I mean, out of the let's go start with final expense. With that particular lead, out of every 10 leads that you have for final expense, there's got to be at least one individual that has money put aside, 401k somewhere, or some kind of financial stock-based product. It might even be in an annuity or the cash value from life insurance. So there's multiple sources that you can find this in, and you need to know them. One, you can find annuities in the life insurance cash value. So number two, you can exchange an annuity for an annuity as long as they're not drawing from it. So you want to get them the higher interest levels. Most people's annuities are at 3%. Ours average 8%. So it's a big difference between the two. Number three, you can find them in index universal life cash values. Number four, you can find them in stock-based products, 401ks. So basically everywhere. I mean, five, you can find them in savings accounts that aren't doing shit. They don't have no earning potentials. So you got life insurance cash value, you got annuities, you got index universal life, you got stock-based products, 401ks, you got the savings account, 403bs to be added. So how do you get there? Most people want to learn how to get there. So the fundamental way to how to get to the annuities is one, through the lead orders. Keep the lead orders coming in. You keep 20, 30, 40, 50, 100 leads coming in a week. You shouldn't have a problem making any money because you're selling final expense or mortgage protection. I can tell you right now that you're going to have better luck with mortgage protection leads than you will with final expense with finding these products, cash, the higher valued individuals with mortgage protection. Usually because they have money still coming in, they're still at their job, or they could be retired and just have larger pension 401ks or stock-based products put aside. Whatever reason, the mortgage protection has just a better form of resource to get to the annuity product. Guys, if everybody can mute out too, that'd be extremely helpful. Be very, very, very kind to you if you could do so. So you come from the lead. You come from this part. You say, hey, Mrs. Jones, I'm the rep that handles your area. I'm in the area to handle your final expense. You set the appointment. You get to the appointment. You set up the sale. Now, inside the sale is a couple pieces of the puzzle, or how I'm influencing people to want to talk to me about this stuff is not by asking them if they have it. Eventually I do, but I get it out of them kind of like through manipulation of the sale, through them not understanding that I'm asking in a certain way. It makes them force this material out. So it kind of opens them up to talking to me about it. So it's simple. When I ask about sales, when I'm talking about the individual products and the system that's in place for them and their needs, I'm trying to find their need so I can place this sale. So their need is different than they think about. What they're thinking about in final expense is death. You can also ask, is the mortgage covered? So you can add mortgage protection to final expense leads to get more premium out of people. Instead of just covering the funeral, start covering more. Cover college funding, cover the cars, cover the landscaping, cover whatever is needed, but get more premium out of your sales by covering more. So find the need. The process is very simple. When I go in and I ask, out of the two of you, who has the two of the higher Social Securities, one of the reasons I'm asking that is because that's what Mrs. Jones is going to be left with. So out of the two Social Securities, if Mr. Jones's is $2,000, Mrs. Jones's is $1,500, she's going to receive his. Now, you know that if they are under the age of 60, that she would have to wait to the age of 60 to receive this. But anything above 60, it takes 6 months to 12 months for her to receive this $2,000. So there's a void in time that you need to cover, and you need to make them cautious of it. So there's something to sell on, is the Social Security habits, which taking 6 to 12 months to get to the other individual. So use that. Now, on top of that, Mr. Jones, do you leave Mrs. Jones with anything else? Is there anything else that you're going to be leaving with her? Is there a pension? Do you have a 401k that she's going to receive? I want her to know that she's got time to buy. So yes, I have a 401k. So it's as simple as that. You see, I didn't have to ask much. I didn't force it out of him. I surely did it so he could see why I was asking, and the reason I was asking was to make sure that Mrs. Jones was supplied with enough time, or she had money into the future. Because everything that I'm doing is about numbers. It really is to come. It's not complex. It's just very simple numbers. At the end of this ride, will she have enough inside that 401k to supply her with the needs after, let's say, 15 to 20 years goes by? Let's say he's 65 years of age. So in 20 years, what is that? He's going to be 80 years of age. So he's not too far from that, you know, from being 80 years of age. So at that time, if he would pass at this time, does he still have enough money in here? And that's what we want them to take a look at, is not draining this, because the 401k just goes down. If you index this product, it's just going to go up. Now, if he doesn't need it, which we hope, now if they're collecting Social Security and they're at $3,500 a month or more, your likelihood of them needing it is low. It depends on the mortgage and things like that. So these are numbers that you have to figure out. You really got to go into detail with this sometimes to find out what the budget actually is, because your job is to find out what's left over every month. To make that quick, you may just want to ask your prospects and say, hey, look, at the end of the month, do you guys have anywhere between $250 to $500 a month left over after all your bills are paid up, after everything's paid up? You have at least that, and even give them spending cash. So after you had taken spending cash out, credit cards are paid, the whole 9 yards, is this left over? Now, if this money's left over, then that's probably what I'm going to make my sale on, whether it be final expense or mortgage protection. Now I know that I have this to work with at least. But on this end, because you still want to make the mortgage protection or final expense sale, you kind of want to accomplish that first. You always want to walk away with that in hand and then move on to this. Now, there is a twist to this. If somebody doesn't want to buy your product at all, let's say they don't want it, they don't like it, but there's still that need. Well, you can easily convince them that, let's hypothetically say Mr. Jones has $150,000 in his account. This is his 401k. If he has that amount, I know by a 30-year look back in the history of annuities, even a 10-year look back, that it would double every 10 years. Now, inside the illustration that you're going to print out, inside the house, print out an illustration. I stop people right in the middle of everything and I say, look, do you have a computer? Does it have a printer? Yes, it does. I'd like to get all your cards out on the table and show you everything that you're going to need to be aware of so your future is better. So may I use that printer? I need to print something out for you. Yes, you may. Go print, call your company, call whatever company you're working with. I hope it's one of ours, and show them that it doubles every 10 years. Literally in the illustration, you're able to flip it open and show them if they were with this company for the past 10 years, their money would have doubled. This $150,000 would be $300,000 now in the 10-year period. It would have been $600,000 if they waited 20 years. It would have been $1.2 million if they waited 30 years. So this is the illustration you're literally able to show them. That's what's making my sales for me, guys. It's not really me, it's the numbers I'm able to prove. So when you're doing this, do not try to do it without the illustrations. You'll fail. You must have tangible items in their hands too. I don't like showing it on my laptop. I prefer showing it by them having it in their hands, the tangible illustration right in their hands. Then you get into the questions. You know, Well, what benefits do I have from doing so? Well, you're going to pay less in taxes. How? You pay on the seed, not the harvest. So inside here, when you make a draw of $1,000, you're going to pay on the seed. When you pull from your 401k and you pull $30,000 out to survive that year, you're going to pay on the harvest. So which is less, this or this? So that's one aspect of it. And it can change. It depends on the annuity and things like that. But I'm giving you a quick run through. Just remember to lower taxes 9 times out of 10. What are you benefiting? How do you sell an annuity by language? How about participating in the upsides and never the downsides of the volatility of the market? So if you want to participate in the upsides and not the downsides of the market, the volatility of the market, which will happen. It happens, what, every 5-10 years? You're going to take a hit. Everybody does. How do you know? Do you really know your stockbroker? Do you ever shake hands with them? 9 times out of 10, they've never even met the guy or girl. And that can be scary too. So how about taking the fees away? No fees, none. You know, there's percentages if you had things on, but at least there's no fees because they never know what those are. And if you're able to really get into that sale and somebody's approaching you for this and they're really liking what you're talking about, you really need to contact their organization and see what these fees are. If you can get into contacting whoever they're with their 401k or stock-based products and ask what their annual fees are or monthly fees, this will help your sale big time. Some sales I found $150,000 one time, and the fees were $900 a month. How the hell are you going to have $900 a month fees for a $150,000 product? I mean, it just doesn't make any sense. It's not clear to me how they do it, but it's done. So it's so it is clear how they do it. It's just confusing why they do it. You know, to get that rich off somebody on the last little bit of money that they have for the rest of their lives is absurd to me. It really is. So what you're doing is you're protecting the last little bit of money that they have. I mean, think about it. Most people that you're going to run into aren't on $1.2, $1.5, $2 million. Their basis is on 150,000, 300K. If they're lucky, 600,000. If they're very lucky. These are the three that you'll see the most out there in between these numbers and even lower. You can sell a lot of the ones below this. Below 150,000 is your market. These people are easy to work with. 150,000 plus, they become a little more difficult. They trust the market. They trust their stockbroker. Whatever the case may be, they haven't trusted you yet. That's the bottom line, if they didn't purchase at all. So remember that when somebody doesn't buy from you, it's not the product. It's the fact is they didn't trust you enough. So you really got to work on rapport to the point of trust. Always get rapport to the point of trust and know your products. You got to know the products somewhat. You don't have to know everything about the products, but you got to know somewhat about what annuities do. And if you can keep it simple, if you ever want to do this, keep it simple, learn the basics, and explain it well. So no more participation in the downsides of the market. And guys, if you notice how I'm drawing this out to you, this is how I draw it out to them. I might go through multiple sheets of paper to explain this. I'll throw them in the trash when I leave. I'm talking thick amounts. Anybody that's ever been in the field with me notices how much I write on paper. Everything I talk about becomes an illustration so they can see everything that I'm talking about. No more participation in the downsides of the market. No more downside fees. Only the participation of the upside of the market. And it's averaging about 8%. So annually, Mrs. Jones, you earn about 8%. If the market dies, let's do an illustration for them that looks like I would do in the home. I will take 150,000 of an annuity, and I will take 150,000 of their 401k, and I'll raise the line. I'll raise it from here. They both come up. This one comes up a little higher than this one usually. This one comes up again. This one comes up again. Now the market dies. So this one's at 180,000. This one's at 190,000, but then it drops to 100,000. So this one restarts at 180,000, so now it's at 230,000 in the next beat, and this one's at 130,000. So this one's at 230, this one's at 130. It started back over. Mrs. Jones, you don't have enough time in life to do this over again. So you don't want to participate in this anymore. Just X this out of your life, stop the downside market, illustrate the market volatility, stop the fees, and participate only in the upsides of the market. That's the plan you need to be involved with, Mrs. Jones. This is what we need to do for you today. Sound good? It's really that easy, you know, but you need to be illustrating it. They need to be seeing every step, everything that you're talking about. So you got to remember a couple words: volatility, downsides, market volatility, participating in the upsides. If you can coordinate those words in your language when you're sitting with prospects who have cash, have universal lives. What am I talking about with an index universal life? I'm talking about the cash value. Why am I talking about an index universal life? Anybody that knows anything about an index universal life knows that it has COI. That means cost of insurance over the years. As it raises monthly. It's $10 the first year. It's $12 the next year. It's $15 the year after that. It's $20 after that. It keeps going up over the years. So they've had it for 30 years. Now the cost of insurance is $130 a month. Where's that money coming from? Does everybody know? Cost of insurance. Does anybody know where that comes from? Comes from the cash value portion of it. So inside here's the CV, the cash value. $130 a month is coming out of this. 30 years later, you ask them, as an illustration, Mrs. Jones, I can tell you right now that this is happening. I know this product very well. If I were to call, which I should call, your carrier, they would tell you the same thing. Now, the numbers may be a little off, but I'm telling you that they're taking from this, and this is going to be done. You're not going to have a policy soon. It's got to be soon. Whether you have one or not right now is the question. So this cash value is $3,000. You can do the math. If this is monthly, you do the math on that, times that by 12. That's what, $1,300, $1,400, $1,600. I don't know what it comes to, but let's say it's $1,600 a year. You know that this is going to be wiped out in 2 years. That's how you pull cash value out of this before it hits $3,000. So if you got it earlier, it'd be something like $10,000 in the 20th year. In the 5th year, it could be, you know, higher. So these are ways. But if you can also use this to get people to pay for their new policy also. So using the cash value from this and starting them over in a new product, you can use the cash value inside this, eliminate this product from its dissolve, and then get them into a new product by using index universal lives, getting them people out of index universal lives. Now, cash value in life insurance is pretty simple. It just stays the same. So if somebody wants to double their money, in cash value won't do that. Some people have $20,000 built up in cash value. I've seen it as high as $50,000 also. I've taken this money and I've indexed it, annuitized it, turned it back into life insurance, by the way, usually with a bonus, so it ends up $22,000, $21,000. So they still keep life insurance, but now they can participate in doubling the money. It makes more sense. Guess what? There's no fees now. They don't have to pay the premium on this product anymore. So now it grows like life insurance and it doubles the money, but you've taken the cash value out of final expense, a large final expense policy. You've turned it into an indexed annuity. It turns immediately into life insurance and it doubles every 10 years. So this will be $40,000 in 10 years. This will be $100,000 in 10 years. Now that's money that they also have access to just in case they need to live and survive off of it, which they probably will. So you're doing them a bunch of justice getting them out of that policy. Don't think you're not. It immediately turns back into life insurance, and it's just another way for you to find annuities. Last way, I think, well, there's multiple ways, but how about cash? Now, cash in a savings account, if we know, oh, I have 100,000, I got 50,000 bucks in my savings account. Well, Mr. Jones, that's not doing anything. I'll tell you what, I have something I'd really like you to take a look at. Since you don't have any stock-based products, you have no life insurance, you really should have life insurance, and that's why we're speaking. I have a way that we can turn this into life insurance and turn it into $100,000 in 10 years. So it'll double. What I'd like to do is do a printout of that. Do you have a printer? Do you have a computer? Yes. Now, that's kind of odd to ask that in the home, but it's what's necessary in the house. I don't have a printer in the back seat of my car. I do not want to come back to that appointment. I'd rather stick with it right now. So I don't want to set an appointment on an appointment and lose the deal. He doesn't want to talk about it later. I can guarantee you they don't want to talk about it at another time. So do it right on the spot. Get to the computer, get to the printer, call your carrier, have an illustration done. 60-year-old male, $50,000. Where's it at? It's cash. We'll ask you all those questions on the phone and show him how he can double his money, plus his life insurance will increase, and his 50K isn't just sitting doing nothing in a savings account. He still has access to it. He gets 10%. Depends for the first for the first 7 years, depends on what product, or 10 years. Now, after that period of time, he gets the whole lump sum if he wants without penalty. But you can also explain this, and this is important to hear while you're explaining this. If somebody gets on you about the penalties involved by taking their money out early, first of all, why are they taking the money out early? What do you need more above 10% for, is the question, if you're really looking to save money. But if they have a problem with that, you tell them, look, your $50,000 by next year should be like $56,000, and the year after that, it's like $60,000. So it's growing and it's kind of deflecting the interest for the first 5 years. So if you make it to the 5th year, Mr. Jones, it's kind of void. You might walk away with, if it's a 5% penalty on it and you're at $70,000, that's not much money to pay as a penalty. You can do the math on this and show them what the penalty would be. So it definitely is more than the $50,000 that they started with. It still leaves him above, anything that he's going to do by leaving it in a savings account. So it's a great way to get cash into an annuity product. Now, like I said, how I'm blowing this off is you gotta see a lot of people. You really do. You gotta have your lead flow coming in, guys. You got to keep the leads up. You gotta trust in this. You gotta trust in the system. If you don't spend $500 a week just to get 40 leads, then you're probably not going to earn $10,000 a week. You want to spend $1,500. Trust in the system. Everybody I know that spends that amount of money does $20K a month to $30K a month. They're working their tail off. I mean, they're hustling. They're doing it, man. They're getting out there. They're making sure that they see everybody. They door knock it. They're using every aspect of the business that they can. So redialing people that didn't answer, calling at the right times, calling in the afternoon, calling in the morning, calling on a Saturday, a Sunday evening. You want to get a hold of people, call on a Saturday morning and call on a Sunday evening. You will book more appointments by doing those 2 days than you will any time during the week. So if you're having a problem booking appointments, start ordering leads and start getting people on the weekends. Now, does anybody have any questions at this point of the webinar? Now that I finally got everybody on it. Anybody have any questions? I know a few of you have seen me do this that are on here. Now, let's just get into the softer end of things so we make you money. Let's just take a little bit of time while we have this webinar going on and start learning how to piece this together while we're taking, let's say, if you're not, most of you are doing final expense. I'm going to stick there for now. Once you get the mortgage protection, you're going to notice a lot more people answering the phone. But when you get into the house, as some of you have seen who are on this webinar, and a lot of you have seen this, me in the house doing this, it becomes a little more difficult and it's challenging when you're selling mortgage protection. You really need to know what you're doing to sell mortgage protection. Nobody taught me. I just learned by failure. But if you fail enough, you also learn too. But selling final expense comes down to nothing less but your lead count, because it doesn't take much effort to sell somebody on a $10,000 policy. All you got to do is do the numbers. Here's what you're not doing, though. You're not finding out what they already have. If you would find out what they have already, you'd be selling more. So inside my script, I go through, out of the two of you, who has the two of the higher Social Securities, okay? And then I'll say, Mr. Jones, are you leaving Mrs. Jones with any pensions or 401k? By the way, do you guys have life insurance existing? Do you have anything on the table now? That's where you get a yes or no. Now, if you get a yes, that's a good thing. They believe it. It's also a place where you need to go to replace policies. Why? Because you may be able to be honest with you, if their health is good, you may be able to replace it for about the same price, for about the same amount, and pull their cash value out. Do you have the policies handy? Yes, I have. Would you mind going to get those? I'd like to take a look at what you already have. That way we can judge on what you have and what you'll need, okay?
You know what?
Take a look at what you'll need for the future. They go get the policies, they pull them out. You look at the cash value portion. Open it up to the cash value part of it. When you open it up to the cash value portion of it, it's going to tell you how many years have gone past, and look and show them how much money they got. Somebody's spending $50 a month. They got a 10-year-old policy. They got $6,000 in cash value. Guys, mute out, please. There's other people on here trying to study. Mute out. Anybody know who that is? Who's not muted? Who's not muted? All right, everybody's. Okay, look. They got $6,000 in cash value. Mrs. Jones, could you use some extra money today, Mr. Jones and you? How about a new driveway, a roof, put on a roof on a house? Here's your money here. So what I'm going to do is I'm going to see what it would cost to get you a $10,000 policy today. And it might be a little more, but, I have policies that earn higher interest rates. They come with living benefits. So work it out. Use your products, man. Get smart about them and start working in the living benefits, the higher interest rates. If you don't, just make sure you always talk about cash value too. Tell people it has 3% interest. I talk about cash value a lot when I'm in the house. Why do I do that? I want people to find interest in their money not going up into the ether. I want them to understand that cash value is value. It brings nothing less but value to them. Why? They may need it later. You may need cash later. You may not want this policy later on. You may not have to, you don't have to pay on this policy. It's called a paid up. You got paid up, so you don't have to pay on this for the rest of your life. You get into a jam, just consider this. Let's say you have $10,000 in cash in there. Well, the company may give you $12,000 in life insurance, maybe 15. It's called a paid up. You never have to pay on it again. You guys got to use some of these techniques in the house to explain the policies, become the expert. And once they figure out you're the guy that understands these things and the products and how they work, they want to buy off you every single time. You can't lose. But you definitely have to work getting them to get you their policies out, look at their cash value, tell them what the cash looks like inside it, so then they can do something with it. Look at this too. Check this out. If you're smart enough, and some of you have seen me do this too, if somebody has a $10,000 policy, they've been paying $50 for like 10 years, and there's $6,000 in cash value or so. Now, what does the company actually only owes them? $4,000 of the insurance money now. $6,000 of it's their money. They don't really owe you $10,000 anymore. They owe you $6,000 of your own money and $4,000 of theirs. It's not $10,000. 6 of yours and 4 of theirs. Why don't we get the insurance company to restart this and owe you a full $10,000 of their money while you take your money back? Why let the insurance company have your money, Mrs. Jones? Just start over. Makes sense, right? So not only are you going to get another $10,000 policy, you may have been paying $50 a month, and this one might be $75, but you're also making $6,000 today. So it kind of makes sense, doesn't it? So that's how you sell final expense and put in existing policies. And sometimes, guys, you'll find people have 3, 4, 5. I've had 8, 10, 13 policies pulled out in front of me. And sometimes all from different companies. I've spent hours at that table getting each cash value to them, sometimes earning people $50,000 at a sit, and turning some of it into annuity money, some of it into their hand for cash, for whatever the hell they need it for. And I've helped pay off credit card bill debts for these people. I've helped pay off back into homes doing this. And then I put them in one policy. You may also run into the fact that they have term. What good is term? Term's just going to term out on them. Doesn't have any cash value. Sure, it comes with a big number that you're never going to get. So, all right, this is $100K that your family receives if you die in 20 years. Do you plan on dying in the next 20 years, Mrs. Jones? You got 20 in you? Okay, great. We don't want this one. That's out. Take that out. Take that premium. use that for a whole life. Get them into a whole life product using the premium from term products. Asking the question, seriously asking, you know, do you got 20 years in you? Will you make it 20 years? Will you make it 10? How about they only have 5 years on the policy left? Do you have 5 years in you? I do the math all the time. I say, look, you have 5 years left on your policy. That means you're spending, let's say you're spending $40 a month times 12. That's, what the hell is that? 40 is 400, that's 480. 480. And then times the next 5 years, 0. That's $2,400 more dollars you're going to spend in the next 5 years on something that you're probably going to outlive. Now, wouldn't it be brighter to put this into something that earns 3% interest, Mrs. Jones? And that way it's there for you? You know, it'd be smarter. Now, it's not going to be $100,000, but we'll do our best to get close. But at least we're using your health and age today. In 5 years, you don't know if your health and age is going to be any good, and you might get nothing. So what we want to do is we want to take advantage of your health and age. Let's get you 3% on your cash value, and let's buy a policy so you don't have to be judged on your health and age in 5 years and get nothing. So it's a very dangerous game you're playing. So, you know, when that policy ends, you may not get into a new one because your health and age, your age is going to go up. It's going to increase the premium. Number two, your health may go down in tubes and you might not get in anything. So, you know, you don't want that graded stuff. So long story short, you're able to sell anybody on anything. You just got to use the right language in the house. Everybody wants a buyer. They didn't fill that damn card out for nothing, right? So everybody wants to learn something. And what your job really is when you're inside these homes, you're to educate people at the highest levels. Don't spend your time just putting 3 options on a piece of paper and saying, here's your options. This is for funerals. That's it. I'm out of here, on to the next. And you don't sell anything. Take your time. Act like every deal is worth $10,000. I treat every deal like it is worth $10,000, and some of them are, you know? So when you're able to walk away with 10, 20 grand a week, you understand what I'm talking about. And you'll spend more time with each individual. Now, per visit, what I suggest you do is if you can get to the point in your leads where you're setting up every hour, you got an hour in between, an hour with somebody, an hour in between to get to them, or 30 minutes, maybe you know the distance. Even filling those voids, because everybody's not there. You know, if you could set an appointment on the hour every hour, I'd almost suggest it. You might say you're nuts. I won't be able to get to everybody, but sure you would. But you'd have to send, you know, recall them, say, hey, I can't get to you today. Would tomorrow work better? You know, but that usually never happens because people don't order enough leads anyway. So the first thing you need to do to be successful is order your leads and continue the lead flow. If you just trust me on this and get to the house and do what I'm telling you to do, you'll make more money than you've ever thought possible. And you'll make it fast too. I just think a few of you need a couple big hits to trust yourself. And it took me a while to do that too, until you run into a $500,000 annuity, which pays you $46,000. When you're able to get chunks of change like that, or how about the time I sold, and several of you know about this, I sold 3 annuities in one day for a total of $1 million sold in one day. Profits on that, $87,000. These are true stories. This is not fake. I'm not lying to you. When they do that 2 years ago, this happened. So, and it's a lot of hunting, man. You got to search them out. You got to find this stuff, but they are there. And it's all in your script, guys. It's very simple. It's right in the script. Out of the 2 of you, who earns the 2 of the higher Social Security? Mrs. Jones. Mr. Jones. I don't know why I use the word Jones, but I do. 65 years of age. She's 60 years of age. Mr. and Mrs. Jones, out of the 2 of you, earns the 2 of the higher Social Securities. And the reason I'm asking, there's the reason, because if you would just bluntly ask, guys, people don't want to give their information out to you. The reason I'm asking is because Mrs. Jones, I'm sorry about these markers will run out on me. Mrs. Jones, if Mr. Jones has the higher of the 2, you're going to have to wait 6 to 12 months before you receive that. So I want to make sure that you understand that, and that whatever you're earning, you'll have to live on for 6 to 12 months. So it's important that we know these numbers, guys. So out of the 2 of you, which earns it? I do. I earn $2,500 a month off Social Security. I earn $1,500. Now, mathematically, can she survive with the mortgage being $1,000 a month? And you got to sometimes get to that. Ask them how much the mortgage is. What's the mortgage cost you? Cost me $800 to $1,000. Well, I know she only got $500 left to pay the car, the insurance, the food, everything. So in this situation, there's definitely a need for life insurance just in this 1 year to fill that void of time. So long story short, we keep going. Mr. Jones, are you also leaving her with a pension, a 401k, or anything like that? Yeah, I have. I got a 401k. Okay, what's the value of that? What will Mrs. Jones receive from that? She'll probably get about $250,000. Oh, I'm like, oh, wow, that's great. Thank you. Thank you, Mr. Jones. I love hearing that. Now I found my annuity. Beyond that, what kind of life insurance do you guys have in place right now? They may have it, they may not. If they don't, good for you. If they do, good for you. Because if you go through this and treat them like a client at your desk who came in for help and spend more time with them, always love the one you're with. Screw the next appointment. Just love the one you're with and take your time with it. Okay, so what I'd like to do is check those out. Do you have those? Yeah, we have several of them. We have 1, 2, 3. Check each policy's cash value. Tell them if they're term products. Go through them one at a time and become the professional. I can tell you all this is if there's married couples out there or boyfriends and girlfriends that are in this business, or guys, if you can influence your girl to get involved with you, setting your appointments, doing your paperwork, helping you organize this inside the home, your business will take off a lot quicker. If it's just you, I've done it on my own. I know it's rough, but you got to take your time. But at the same time, you got to be in a hurry too. So it's kind of awkward, but get them to listen. Okay, this one has cash value. This one's term. This one has cash value. Check the cash value sheets. Tell them how long the term is on this one. Okay, use these 3 premiums to buy life insurance new. Get a new product in place. Then tell them, you know what, Mr. Jones, I'd like to lay out everything on the table. I'd like everything to be known by you today. So what I'd like to do is show you how people are doing it today with these 401ks, because you don't want to lose any money. God forbid that the market dives 33%, next month, and you take a wild hit out of the blue. Your stockbroker picks some funky product that you don't know about, and you dive down the tube. So it could happen. It's not saying it will, but the best way to do that is not to participate in the downsides of the market, but only participate in the upsides. And would you be happy with 13% annually? Would that satisfy you? And every year with proof, okay? So what I'd like to do is I'd like to print this up for you. Do you guys have a computer or a printer I can use? Call your company, get an illustration, go immediately to the 10-year look-back period, which tells them if they were with this company for the past 10 years, this number would have been $250,000, would have been $500,000. Now, if they were with this 401k long enough, you could probably ask them, in the past 10 years, have you substantially earned any real money? Have you really grown in the past 10 years? Like, did you come from $100,000 to $250,000? Or is this pretty much stagnant? Most people say it's been stagnant. Some people say that they've earned money. So it could go either way. But at the same time, your positioning on this is not to have them participate in the downsides of the market. So participating in the upsides only of the market, no more volatility, no more fees, no more broker calls. Just eliminate everybody that's involved except you and the insurance company who has the best stockbrokers in the world working for you. Why not take advantage of their brokers? A $1 billion company, why not? So you've taken that, illustrated it, you find out how to get the money out of Mr. and Mrs. Jones, ask about the Social Security, ask about the pensions or 401ks, get to the life insurance, do the mathematics, and don't forget to explain inflation. If it comes up, if it doesn't come up, explain it. Mr. and Mrs. Jones, inflation's about 4% a year. You guys not only need to deflect that, so it means if you earn 13% on your 401k, that you've actually earned what, 9% because of inflation. So we need to stay on track here. But the downside is if you lost 13%, you not lost a hell of a lot more than 13%. You're down 17% because of inflation. So you have to understand how to work the numbers in people's minds and show them mathematics that they're not seeing, guys. And if you do that, you'll be able to sell them on the products, period. So it's just about the math. Leading them into the belief of, with final expense and life insurance, just getting them into a position to buy these policies is real simple. I mean, find the need. The biggest word I can speak of is the need. Now, with the need word, it's really never their need, man. You should find the need, like finding out what they have left over to pay. God forbid, Mr. Jones, if you were to die tomorrow, would Mrs. Jones have just more than a funeral to take care of? Would she have a mortgage to pay too? Does she have a car payment to pay? Is there any kids involved? So if it's final expense, look into getting them larger numbers and, trying to eliminate term from your vocabulary too, by helping these people earn cash value. Now, if you do a little of both, if you could sell term and cash value products, that's great for younger couples, so they could cover the mortgage. So you may run into mortgage protection while you're in a final expense lead, is all I'm saying. You might find the 401ks there, 403bs are a big one too. You may find cash. You got to search for it, don't hunt it down, and make sure that they understand why you're asking. So the most important part about the puzzle I can give you is making sure people understand why are you asking me about my money or about my insurance products or about my 401k. So when you're talking to them to get this stuff out, tell them why you're asking. Let them know. So the need list is long. It's mortgage payments, $1,000 on average. Funeral, $10,000. Food, $400 a month. Gas in the car, $100 a month. Cable bill, $200 a month. Cell phone, $100. It all adds up. And now, Mrs. Jones, you no longer have his income. Okay, so I want you to imagine you in the world with $1,500 a month. That's all you got, and you have all this as my guesstimate so far. And this is just the first hint that you have. There may be taxes involved. We don't know. If anybody's worth above $500,000, 600,000 usually or above, it's probably probated, so they can be under the state probate laws. You have to check. So if you run into somebody that's valued at over 600 grand and they get hit with probate, somebody could owe 33% of their whole estate before they can even sell the home or get access to the 401k or even the bank accounts. So you need to explain probate tax to people sometimes too. If you don't know that word, look it up. See if it's a part of your state that you live in too. But showing people what the hell's going on and showing them the actual debt that they are going to have is the need. The lawn scale needs cut. Mr. Jones, you handle that. Take the time out. I have a sheet I can fax you, and it has all this illustrated. Many of you already have it. But if you don't have it, just send me a text message or an email, and I can get that over to you, where it illustrates everything. And I show them the list. I say, this stuff's still going to go on. So I'm able to show them, Mr. and Mrs. Jones, you agree? Mrs. Jones, you're going to be left with this. Why do I keep saying Mrs. Jones? Because that's usually 9 times out of 10 the person we're trying to protect in a home scenario. You got to be careful though on how you work this, because that's a part of your job, is to find this out. Now 9 times out of 10 the man is the earner or a larger earner than the woman, for whatever reason. It's just that way in homes. Total income 50K to 100K. Pensions, retirement plans, things like that. Depends on the age and health of them, for the price of the product. But if you hunt out what they already have and show them what they have or don't have, then you're going to be able to be a better salesman. So that's your job, is really to find out what they have, find the need, find out what they have, or find out what they don't have and fill the void. Get them illustrated on some of the things that you now know, which is the 6 to 12 month period in Social Security. Use that against them or for them, help them. The void in time that it can take to get stock-based products. If you get an annuity, it usually happens to be life insurance, and it happens to get to you a lot faster than stock-based products can. There's a lot of taxes that you're going to owe. If that product is not in her name, but she's even a beneficiary, she's still going to have to pay a huge amount of taxes on it. So immediately they're taxed heavily. So you could tell Mrs. Jones, if you have $100,000 and you're taxed 25% of it, I mean, that's $75,000 you're now left with. How about turning it into life insurance instead, and the taxation is a hell of a lot lighter if you annuitize money. But from a final expense standpoint of view, what you need to be doing is you can throw down 3 options. It's always optional, but I do this. I throw down 3 options here. This is the lighter side. This is the heavy side. This is the side that covers the mortgage, the funeral, the grass getting cut, the gas in the car, the kids, the food, the lifestyle. This one here is just for the cremation or funeral. Now, when I throw 3 items on the list here, this one might be $100 a month, this one might be $150, and this one might be $200. This one might be $50, this one might be $75, and this one might be $90. There's 2 sets of options here now. Okay, it's not to confuse them. It's just to say, hey, look, this is the one that takes care of the heavier side of life. This is the one that takes care of the lighter side of life. This comes with $10,000. This one comes with $50,000 to start with. And this is how you could sell larger premiums. So if you're interested in increasing the amount of money you earn, show them 2 sides of the coin, man. There's the lighter side and there's the heavier side of life. Takes care of cremation and things, but always make sure it fits in their budget. Mr. and Mrs. Jones, at the end of the month, do you guys have left over $500 to $1,000? Yes, we do. Which one are you closer to, 500 or 1,000? We're closer to 500. Now, out of that, I'm going to subtract $250 just in case they're lying to me, and I'm going to say I got about $150 to work with in this house that I know that I can stuff towards premium, then it won't fall off the books. Okay? So that's the number I would go for when you're going for that. That's the difference in homes. That's why I make bigger premium sales, and sometimes yours are lower. So if you want to increase the premium sales, get on this side of selling and not this side. Show both. Okay? So, I don't know, guys. It's been a good ride. What do you think? Any questions? If you have any questions, ask now. You can ask questions here. I got 2 computers going. Ask here. So you can type in the questions too, guys, if you have any. Is there anything I'm missing? Like, what did I not talk about? Let's just review real quickly. If you want to be successful, you got to trust in the lead program and just the program in general. Look, you're going to fail like crazy, man. You're going to fail like crazy, okay? But you have to trust the lead order. Get involved with this thing. Order $500 worth of leads. Get yourself $1,000 in leads. Now, the secret to this is reinvesting this money every week. You should reap this back. You should get this back in a week. After you sold the products, it's come back to you. So my theory is using the same $1,000 week in and week out. Just keep it going. Just keep the same grand working for you. Instead of thinking, oh, it's $1,000 a week, it's $1,000. It's not $1,000 a week. You earned off it. So, you got to understand your investment should be one time and not multiple times. Let me answer this question. What's the lowest amount of money you can start an annuity? Good question. $10,000 for most carriers. So the lowest amount you can subject somebody to an indexed annuity is usually $10,000. Usually. It depends on the carrier. There may be lower ones, maybe fixed indexed annuities you can get people involved in where they make payments on it and things like that. But this one here, what we have is usually $10,000 is the lowest you can start somebody with. Now, why? Do you have somebody like that? If you do, we should talk about it. But look, all of you can find at least one person every week out of 10 people, out of 10 leads. One person has to have cash value, an index universal life, an annuity, or a 401k, or some stock-based product. 1, 2, 3, 4, 5. You know, it's usually the numbers, to be honest with you. But if you're not getting it out of them, you'll never know. And, you know, how do you find annuities? Again, this is important. I'm not asking, I am asking, do you have any stock-based products, pensions, or 401ks? The reason I'm asking is because that's what Mrs. Jones is going to be left with. And I kind of want to find your need based around what she's left with so we can find out what she needs. So here's what she has. Let's find out what she needs. So what is this valued to her? How much will she receive? So I have a 403B, and it's valued at $200,000. Wonderful. I want to stay on track here, though. I'm not transferring to the annuity yet. I'm still selling final expense. Great, wonderful. Do you guys have any life insurance? Do you have any life insurance? Yes, we have a small policy. It's worth $10,000. What do you pay on that? I pay about $30 a month on that. Who's that with, by the way? I say, who's that with, by the way? I don't say, who's that with? Who's that with, by the way? Like I'm stupid. So, you have $30 a month. You got $10,000. It's with, I don't know, MetLife, whoever. Doesn't matter. Okay, that's wonderful. Continue. Now, Mrs. Jones, by the way, would you like a cremation or burial? Have you two discussed that yet? Yes, we'd like to just do cremation. Okay, well, I'm thinking they already have enough. They don't. Because of inflation, they don't. So never, ever go into a home and do somebody injustice by saying you have enough. They don't. Inflation is a killer to our people, our prospects. They don't see it yet until you came in. Here's 4% every year, Mrs. Jones. This is inflation. This is how inflation works. Spell it out. Let them see it. This is your income. It's level. Here's taxes. Taxes go up. So just to carry you through life, we need to prepare you for this because you're $1,500 a month coming in. Now, let's talk 20 years from now. What's $1,500 going to be worth? About $1,000, but your bills are still $1,500? Let's hypothetically say you make it that long. You know, people are living longer. People are going into their 90s. By the way, what's your family tree live to? Do they go into their 70s, 80s? No, my grandmother was 93. Well, there's your proof. 93 years of age. You could go all the way to here and not have enough money to live, you know? So we want to prepare you for that. So what my suggestion is that we look at something that helps you alongside your other product, or we check out your product and see if we can merge that premium with another one, because you're always going to get a larger product by taking two policies and putting them together. So if I take your $30 and I add it, obviously you knew you were going to spend more today. Let's say I add it to $50 and I take $80, I'll be able to get you something like $20,000, $30,000, you know, depending on the age. Now that's a lot more than your $10,000 is, and it's only $50 more, plus you're earning cash value, so you have 3% interest on that money. So you're earning money on it. So if you need access to the cash, you can have access to loans from your cash value. You want to shut the policy down later on, you can do that and still have a policy in place. That's called paid up addition. So you can explain that if you choose to. It's called a paid up. So you get all the way, you get 10 years into it, and you have, you know, $5,000 in cash value. Maybe the company will give you $7,000, but you'll never have to pay on it again. So long story short, you have options here. You have 3% interest, a little higher premium, but we know inside your budget that you probably have about $200 to $400 a month left over. Would I be right? Yes. Which one am I closer to? The 200. Okay, so we know that you know, after all your bills are paid, that you have the money. You know, you'll be left. If I told you, now here's another trick I do. If I find out what they bring in a month, you know how I go over the Social Security, and Mrs. Jones earns $1,500, Mr. Jones earns $2,500. Well, that's $4,000. And if I tell them, Mr. and Mrs. Jones, can you live on, let's say you can live on $3,900 or even $3,800 a month. Could you live on that? Could Could you survive on that? And the answer is always yes. Now I know here's $100 here and here's $200 here. When you're done with this sale process, you can always say, look, you said you could survive on this and this, and you'll have it written down on paper. You know, switch to another sheet of paper and use this paper, come back to it and show them what we discussed. You get $3,800 here, you could survive on. That's $200 invested into protecting your wife, Mr. Jones, from the worst day of her life. You're no longer here, nor your income slashed in half. I know you're not going to care because you'd be dead. And she has to suffer through time, whether it happens tomorrow or 20 years from now, there's going to be some suffering. We're trying to ease that suffering through finances. Giving her more money will, I promise you, help her. So let's continue getting her the numbers that we need. Let's see what 100 brings us. Let's see what 200 brings us. And this one brings us 50,000. This one brings us 100,000. Which one looks better to you, right? We could fit this in your budget. I think she needs this one here. This pays the house off. This pays off of all debts. You know, are we good with that? Sure, let's do it. And that's it. Sorry about the dimness, guys. My lights, I'm not on and I don't want to walk away to flick it on. So I'm almost done here. So any more questions? It's been a long ride, everybody. I appreciate you all hanging in there for this. Anybody with any more questions? If you're new to us, text join 252-255-2594 to talk more about the opportunity. If you're new to us on Facebook Live, text join to 352-255-2594 to join my organization, or just talk about some of the offers I have for you at the company. So the lead program works fabulous. Believe me, I got higher contract law offers out there. The lead program works fantastic. I have hired people from other organizations. They all come over because majorly the lead program. They also come over due to the fact that I don't miss training. However, I did miss Saturday, but I got back in here due to Alyssa's health cause. I had to miss. So I'm back on here on Sunday to make up for Saturday's loss on this. I hope you guys all got something out of this. It's fast, it's quick, but if you do this every week with me, I promise you, you will get a lot of information out of it. There are tons and tons of videos that I've done over the past year and a half, almost 2 years now. And you know, there's a lot of value to coming in. Trust me. What whole life carriers are offering 3% interest on cash value? Almost all of them, to be honest with you. If you're new to this and you don't know about the cash value interest on whole life products, mainly all of them. There's not too many that don't have interest. Transamerica's 4.5%. LSW believes it's 7.14%. I don't know anybody higher than that one, to be honest with you. That's a high earnings on cash, but that one actually goes up to 12.5% due to the S&P. So that's a great option to show people the cash value sheet inside that product. And we do teach a lot on that. But most carriers are balanced about 3% annually on cash value products, guys. So any more questions? Any questions at all? I want to thank all you that joined the webinar from Facebook, and thank you all for being on the webinar. One last time, any more questions? Go ahead and speak the questions out, guys. You don't have to text them all in. We can talk now. We can communicate now. If you want to unmute and just have a conversation, just talk. It'll help other people if you talk a little bit. Like I said, last thing, if you're going to sell life insurance, you've got to have, if you're going to own a business, you're 1099. If you're going to own a business, you got to market the hell out of that business. If you had a storefront, you'd pay for a sign that went up. You probably pay 20, 30 grand for a sign that goes on the front of the building. Then you're going to pay for flyers. You're going to pay $100 a week in flyers. You're going to pay for direct mail. You're going to pay for an ad in the yellow pages. You're going to pay for ads on your website, things like that. You've got to get involved with the fact that you're going to pay for advertising if you want to become a true business. Are you trying to be a company, or are you just trying to be a salesman is the question. You want to make some money being a salesman? Great. Buy leads. Get involved. Become a salesman. If you want to be a company, start teaching other people how to duplicate this business. Teach them how to duplicate the business. Teach them how to duplicate the business, and you will grow. But if there are no more questions, guys, I'm going to get off here. If there are, I'm waiting a minute here for any more questions. Facebook, if you have any questions, go ahead and ask. If not, I'm going to let Facebook go. Okay, guys, I appreciate everybody being on here. I will see you again sometime next week, and we will go over mortgage protection, sales, leads, how to set the appointment, and how to make the sale. Mortgage protection, okay? I'd like everybody to start getting involved. There are B-lead mortgage protection leads for $3 a pop. So if you can learn how to sell mortgage protection, you could earn a ton off of $3 leads at 30 days old. Nobody sold them. I'm telling you, there's a lot of value to these leads. You can make a mint off these mortgage protection leads. If they bought it, who cares? Mrs. Jones, I can get you 2 times the amount that you already have. Let me come out and give you the information. So what if they already bought it? We'll be able to set the appointment anyway, and we'll teach you how to do that. Okay, guys, I had a great time. Thank you for all being here, and I'll see you again next week. Thank you.